Hi guys, this is Dr. Sadashivam once again with you. And today we are going to talk about Nifty, which is consolidating. Just as I had explained in my previous video, Nifty had reached 18,700. When was that? It was in the month of October 20th to be precise. Let me also give you a little bit of history, because during the last year, that is March 2020, when COVID started, the market had dipped down to 8,000 points. And from 8,000 points in March till October 2021, the Nifty had reached 18,700. After that, there was a small dip. It dipped to approximately 16,400. There have been lots and lots of reasons: US interest rates, crude oil, COVID third wave. But the manner in which it is now going uphill, because this trend started from December 20th onwards, and today, if you see, it is somewhere hovering in the range of approximately 18,250. But it was not so easy. The journey was not easy, but it was a roller coaster. Even if you had looked at yesterday's yesterday's market, it's very difficult to make money in this kind of a situation, especially for day traders. But for long-term people, they need not be concerned with these inter-day fluctuations, because how does it matter whether the market is going up or going down? All that should matter for the intraday traders and not for people who have a long-term perspective, right? I'd already put in a video, on the outlook for 2022, and it's not possible for me to give you the entire outlook, right? So on a daily basis, I will be providing you tonic like this for 5 or 10 minutes. So please subscribe to this channel and please watch this video till the last. There's a lot of things about general knowledge, about stock market. There are a lot of professionals. Whether you invest in the stock market or not doesn't matter, but you will get to know what is happening in the US, what is happening in India, what is happening on the macroeconomic front. You're meeting your clients, you're giving presentations to your bosses, right? Now what is happening is the earnings season, and all these companies will come forward and announce their earnings, especially IT sector, whether it is Infosys, Wipro, TCS, and you will find that all these results, one can expect breathtaking results, right? Way above the street expectations. Whatever they had expected, it's much more than that. Whether it is revenue guidance, whether it is margin guidance, whether it is attrition, lots and lots of people are leaving companies. People are getting recruited, because these are some of the factors, important factors. Remember, attritions. Why do people leave companies? Because there's so much of demand outside. What does that mean? Because there's so much of business coming inside, and that's the reason for people leaving companies. But people are coming in. People are fixed. It's the same people who move around from one company to other, but that is an indication that the demand is increasing. There's a lot of business coming from outside. I'm talking about IT. We have talked about Infosys, TCS, Wipro, etc. For the last 2 years, IT is doing extremely well, right? Whether it is small cap, large cap, mid cap, wherever you had invested your money, you're getting twice the returns, right? In fact, it takes 12 years for the money to get double, right? So there's prosperity happening everywhere, and every company had given you 60 to 70% returns. Now, other sector companies are also coming with their results. It's not just the IT sector. There are a lot of sectors like your infrastructure, telecommunication, retail marketing, all those companies are coming out with their results, right? But IT had done a great job, and there are other companies like the street is expecting that the results will be good, but over a period of time, I will keep explaining all these. But it didn't come so easily, but it came with lots and lots of volatility. We talked about roller coasters, right? Today it started at 18,250. It started, then it came down to 18,150, then it reached 200, then 350, then it came down. Look at the volatility, guys, because these volatility are expected to continue for some more time, but there are reasons for that. We have talked about earning seasons. The second milestone that is happening is LIC IPO. Everybody's eyes is fixed on that. I will be putting up a special video on that. Please subscribe to this channel and watch this channel every day, and I will give you all details about LIC, how much do you invest, how much will be the gains, etc., etc. There are some important factors that will drive the market in 2022, because the budget is going to affect this share market, because government has two policies: fiscal policy, monetary policy, etc. Like fiscal policy, you have duties, etc., etc. Monetary policies, interest rates go up, go down. I'll put up a separate video, but broadly speaking, please understand that the government needs to give impetus to consumption. That is putting money into people's hands so that people can spend that money, because it is with this money the whole economy is running. This is what is called a circular flow of money. I will be putting up another video on circular velocity of money, right? So whenever I talk about circular velocity of money, you would be able to comprehend all this, because these fundamentals you will get to know over a period of time. You can't become so knowledgeable in one day. So every day you have to look at these videos for 5 minutes or 10 minutes, so that in 1 year you will get a feeling that you also know a little bit about economics, and you will be able to connect that with the events happening outside, and you will be able to quantitatively talk about it, not like sitting in a barber shop and discussing politics and economics. So we said that consumption is extremely important, and for that government policies are very, very important, and the whole stock market will move as per that, right? So based on that, sometimes the market can go up and go down. This is what is called as implied volatility, a term which is often used in options trading. You also have option chain. In option chain, you have a put price, call price, you have implied volatility, and you also have India VIX. I will put another video to demystify all these concepts, but just understand volatility, because whenever elections are announced, there will be too much of volatility. For example, Reliance today is selling at 2,500, but suddenly it will drop by 10% by 250 points. It will go up by 250 points. There's another factor, which is the state elections. For example, your Goa, Manipur, Punjab, Uttarakhand, Uttar Pradesh, Yogi ji, Jai Shri Wale. Right. So all that will keep happening, guys. Nobody can stop that. But there's another factor which is called as FOMC, which is Federal Open Market Committee. This is in US. Like we have RBI in India, they decide the interest rates. They also do the same thing. They manage four important pillars, which is reserve requirements, open market operations, discount rates, and foreign reserves. For example, when we run our household, we have a head of the family. He understands that there are these expenses. The boy might be going on a picnic, relatives are coming, we need to take them out for picnics to Agra, etc. They plan all these expenditure in advance, and that is what is called as reserve requirements. And after that, you have open market operations, which is called as open market operations. Whenever there is inflation, what happens? Too much inflation is also not good, because consumers have issues, citizens have problems, elections are there, so that needs to be kept under control. But if you reduce that, growth suffers. Then industries will not grow, employment will not grow. It is going to affect in a different manner. So here also there are issues, here also this issues. So there is a need to balance. The government has a lot of levers. Like for example, when a bus driver is driving, he has got a gear in his hand. When it is going uphill, he puts one gear. When it's going downhill, he puts another gear. Likewise, the government keeps on using all these levers, increasing the liquidity, reducing the liquidity, as a result of which they manage the price stability. After that, you have discount rates. Now, when you have excess money, for example, you have 10 lakh rupee in hand, will you put it in the savings bank or put it in stock market, put it in property? Because all these carry their own risks and advantages, right? So all that needs to be, you need to adopt some kind of a trade-off. So like we manage our money, governments also manage their own money, and this is how the government manages its reserves. Like for example, in today's state, India, let me give you this information, $600 billion, not a small amount, huge amount. Especially in the last 2-3 years, so much of foreign exchange has accumulated because government's monetary policy, government is doing a great job, right? I don't want to get into politics. Maximum employment also needs to be ensured. You need to have stable prices. So when we were talking about United States, there are lots and lots of poor people in US. A lot of people think that somebody has gone to US, everybody is rich. Absolutely don't. Look at one city, New York, and conclude that everybody is rich. By lots of people are staying on the road, homeless people, to dangerous condition, right? Announce a lot of subsidy schemes. Poor people waiting in queues for taking that stuff. Once you go to US, you will understand the situation. I have gone to New York. I've seen these places. I've seen poor people, how they live there. There is a place in Center Place in New York, right? Michigan. No, not that. Let me explain. I'm forgetting the name of that place, whatever it. Michael Jackson used to roam around there, I was told, by the tour. Manhattan is the place. Sorry, Manhattan, right? Too many poor people. Spanish Harlem, I don't know, they were saying, right? So government keeps doing a lot of things for those poor people, welfare measures, etc. No, inflation is US is too high. US currently the inflation is what they have not seen in the last 40 years, guys, 4 decades. India is a heaven to stay in. Let me tell you that. There is absolutely no problem as far as India is concerned. Here the inflation is just 3.5%. Here it is 7%, guys, double. So in order to control those, US is increasing its interest rates. How does that matter? It matters to us because whenever they raise their interest rates, the money from here is going over there to their bond markets. But to a very large extent, we have to admit that you have something called as FII, which is foreign institutional investors. Their dominance on the Indian market is going down and down. And the power of the retail investors is going up and down. People are putting in money, right? So therefore, the dependence on FIIs is slowly going down and down, right? So in US, they are increasing the interest rates. Now in the year 2022, they will increase interest rates 3 or 4 times. Next year, it's going to be 8 times. 8 times if they raise the interest rates, it will have a great impact on the stock markets here because this money will go to their bond market. These things will affect the stock markets, but there's nothing to be so afraid because the retail investors have come into the segment. Who are the retail investors? Our own investors, people from our own country who put money into the stock market. Gupta ji, Sharma ji, Mishra ji, they are the retail investors we are talking about. You have domestic institutional investors like Kotak Mahindra Fund, HDFC funds, ICICI fund, SBI funds. People are all those are putting money into the stock market through domestic institutional investors. So there are certain factors. Of course, FII is also a factor because this is what we are going to look in the year in 2022. That's the stock market outline. So the purpose of this video is not for me to tell you put this in this company, that company, State Bank, Reliance. You watch the stock market, and once in a while I'll give you some tips and you can probably take those tips and start investing because the same factors which drove the market in 2021 will drive the market in 2022.